in the New York Stock Exchange. At the CME, Alan Nuckman, and we have at the NYMEX, Luke Rabari and Scott as well. Scott, let me start with you at the New York Stock Exchange. I want to ask you if the momentum for this stock market has stalled. And I say that, Scott Redler, with respect to the Russell 2000, now negative. The small caps now negative for 2017. The Dow Transports, they're looking weaker as well. We've seen today tech and banks selling off a bit. Has the momentum changed, if not stalled?
I think we saw a momentum shift last week. The Russell's been weaker probably for about 2-3 weeks, and the question was, would the S&P cash and tech start to lose momentum? So if you remember last week when the S&P cash lost 2460, which was the 21-day moving averages, I think some traders, dialed back some risk. And then we lost the 50-day at 2448. So at this point, we're almost 3% off the highs in the S&P cash. I think we're looking for about a 5% move off those highs. So I think at this point, if you're not fully involved, I wouldn't put more money involved until closer to 2,400 or 2,380 in the S&P.
And speaking of the S&P, we do have to point out to our viewers that it is up 8.3% so far in 2017. So many investors putting their money to work. Alan, let me bring you in here. Copper having a terrific day today. We're seeing the highest level since November of 2014. Alan?
Yeah, copper's not necessarily the Dr. Copper anymore. It doesn't really diagnose the economy like it used to, but it's like gold. It needed to get through a significant level, and that $3 level is important, just like 1,300 in gold. The downside of the gold action was that it wasn't sustainable, and it didn't stay above that. It actually lost $2 on the week. But I'm seeing a couple positive threads today, even though the market made new relative lows or new month lows anyways. We're not seeing new highs in treasuries, and we're not seeing new relative highs in the VIX. The VIX was actually down Friday and actually down once again. So maybe this downward movement has slowed.
Yeah, and we're looking at gold prices now about $3 shy of 1,300, which we finally hit back on Friday. Luke, let me bring in you here. You have oil prices struggling. I mean, come on, this has been a down market for the price of oil. But we saw in the past 2 weeks, oil rig count has gone down. There seems to be consensus among OPEC members to take supply off the table. Is moving the price of oil to the upside.
Well, there might be consensus to take supply off, but who's going to have the will to do it? I'm not sure if any of them do. And besides, it's the price of oil right now is really related to rig counts and supply in the U.S. And the $50 mark is where the shale providers are saying that they can break even or make money. I thought it was lower. I thought it was 45. But I think they want to see a $50 price before they increase production. And there's been rumors that there's been a lot of hedging going on. As we saw a few months ago, when oil gets above 50, there's a lot of producers and even sovereign nations that are hedging at above the $50 level. So they just don't think it's going to break that. And I think we're going to be stuck in this range for a while. But that doesn't mean to me that gasoline prices are going to go down as well. Look for gasoline to stay steady as oil goes down.
I've actually seen it go up where I live. Luke Rabari, good to see you. Alan Nuckman and Scott Redler, good to see all three of you today. Thanks for your perspective.